Hello traders, Ala Peters on beautiful September 8th, an hour prior to oil news. Let's review oil and let's discuss what to expect based on Fibonacci levels, as all the levels always present before price will make the move. Fibonacci levels show you where the price is heading to and what to expect next. This is oil monthly chart that's been in front of you in the trading room for the last 5 years since the start of the website. How you trade the levels determined by the knowledge of Fibonacci. Bullish rally on oil came from crucial reversal zone on monthly. Done exact same thing as oil had done in 2009. No surprise here. But bullish rally reached crucial Fibonacci resistance, and oil been struggling immensely to break through this level. This is a very big problem area on monthly. Months 1, 2, 3, 4, 5, 6. Oil struggling to break through this level. Price spelled out these levels more than 10 years ago in a play in front of you today on monthly. It is all about this Fibonacci level. As long as oil will respecting and struggling to break through 50, this is ultimate Fibonacci resistance. And this is what must be broken in order for oil to head higher. Buyers currently are weak when it comes to long-term Fibonacci entry. Knowledgeable trader acquired position as low as possible, as you're witnessing time and time from emails from graduates who've been acquiring position on oil at 30, nowhere near 50. This is a problem area. And let me just remind you what has happened on oil in prior years. When oil reached reversal zone of the bullish trend from 2009, it reversed until the end of the minor trend. Oil had struggled to break through this level for the next 4 years. This is the level we will be reviewing on short-term hourly chart next. Once oil had broken through the end of the minor trend, in 2014, collapse went on with vengeance, all the way until 30. So let's take a look on weekly, and let's remember the end of the minor trend. Remember, it was a crucial support on monthly, and it is crucial resistance on weekly. These levels had been in front of you for over a year. If you are investing on oil based on weekly and monthly chart, you're holding positions as options trader or as an investor. On weekly chart, this is a very big problem area. But once again, bullish rally came in from reversal zone. And this is all about this level right now on weekly, as it is the end of the minor bullish trend. So let's take a look on short-term chart, guiding light to day trading entries. Let's remember the end of the minor trend. And let's remember how accurate Fibonacci levels are if you know how to use them properly. This is where bullish rally came from crucial decision point 2, reached decision point 2. Reminding you, never enter into Fibonacci level, only trade between Fibonacci levels. As buyers picking up this team on S&P, as I've been warning you, your only option counter trend bullish move. As I've been warning you, sellers exhausted and buyers are weak. Your only option not to participate in this market. What a fluff on S&P. Will buyers pick up this team? So, Oil reached the end of the minor trend, crucial Fibonacci support. Remember the end of the minor trend on monthly? Remember the end of the minor trend on weekly? It's all exact same formula when it comes to day trading. This is crucial Fibonacci support. This is where buyers stepped in with vengeance. Once again reached decision point 2, and this is where market struggling to break through. Bias at this level remains firmly bearish. Sellers are extremely weak on oil hourly. Can they pick up this steam? Yes, they can. But right now, selling pressure exhausted. If sellers will head lower at the time of oil news release, your bias here is bullish. Right now, price in the middle of nowhere. You can witness very jittery, very panicky pullbacks. We would love for the price to retrace as low as possible, as entry anywhere near this level, not an option, as oil had been struggling for the last 20 plus hours to break through this level. So, price is in the middle of nowhere. Lower the price goes, more interesting market will become. This is massive bearish correction on hourly. This is massive bullish correction on S&P. Formula remains the same. It doesn't matter if it's oil hourly. It doesn't matter if it's S&P 1-minute chart. How you obey the rules and what chart speaks to you when it comes to trading will determine the rest of the story. Every single trade must be taken only if rules are met. Right now, oil in brutal bearish correction. Lower the price goes, more interesting market will become. Bias on oil is bearish. This is crucial resistance level. Shorting here, buying from here. This is ultimate resistance. Sellers are weak. So traders, an hour ago we discussed that sellers are very weak, and this is crucial Fibonacci resistance. Oil dancing back and forth in no man's land. So if oil blasting through this level, it will fly drastically higher. We would like to be outside of this area in order to be interested in oil. This is massive bearish correction on hourly. What ideally we would like to see is for the oil to collapse a little bit lower to get out of this corrective mode. Specifically, what would be flawless place to be? At this crucial Fibonacci support where bullish rally had started on September 6th, at the end of the minor trend. If this is not the case, we would like to see powerful spike until reversal zone. This is massive correction. This is very narrow range on oil. It doesn't matter to me whatsoever what oil news is. Fibonacci levels displayed in front of you always far in advance have extremely high accuracy of mid 90%. If you know the rules, you know how to trade the levels. Right now you are on standby, you are a knowledgeable trader, you understand that you must allow price to settle down. The first 5 minutes after oil news release, you do not touch the market. You absolutely expect powerful swings back and forth, and only after 5 minutes you can pay attention to oil, moving the chart to 1 minute so you can see the spikes, and we will pay attention to volatility of oil news, which can be extreme. So this is what expected on oil traders, plus 0.5 ME. Anything above this number is a bearish news. Anything below this number is a bullish news. Oil news, unlike any other news, complete reversal. More oil we'll have, less expensive oil should be. less oil will have, more expensive oil will be. Completely reverse news, unlike any other news. Oil news in 1 minute. Expect spectacular spikes back and forth. First 5 minutes we will allow oil to settle down. All Fibonacci levels always in front of you, far in advance. This is key support, this is key resistance. On 1 minute chart, showtime. How did we know that on S&P our bias was firmly bullish? How did we know that on oil this was crucial support? Simple, Fibonacci said so. I warned you sellers are weak. I warned you it was worthless bearish correction. What price will do at reversal zone will determine the rest of the story. S&P is rallying. How did we know? 2182, key moment, trail very carefully. Showtime. Once again, we are on the right side of the market. Shock or not, oil came to reversal zone. Will it reverse, crash and burn completely? This was key Fibonacci support, exact same level you witnessed on monthly. This is key Fibonacci support on 1 minute chart. Shock or not, reversal zone is reached. I warned you about spikes, didn't I? Oopsie doopsie doo. Reversal zone. Price is struggling. Exact same formula as oil monthly. No surprise here. Reversal zone 1 minute. Reversal zone monthly. Price will crash and burn all the way back down to Fibonacci support. Here it goes. This is exactly the reason I named this proprietary Fibonacci level reversal zone. Never enter into it. And my beautiful alphas, the famous 2182 we've been discussing, and pain and torture we're expecting. And that's pure magic in my humble opinion. It never gets old. This is the reason I live and breathe what I do. What a shortage of supply on oil. What a bullish news. But what is the problem? Oil struggling to break through reversal zone 5 minutes after oil news release. Massive correction. There is no reversal here. It's only a correction. Nevertheless, price is respecting reversal zone despite bullish news, as expected. This is where oil is heading to, traders. 48.92. This may be the week that oil will finally break through this level. Bias on oil remained firmly bullish. But what oil will do at this level will determine the rest of the story. You witnessed on hourly chart the importance of respecting crucial Fibonacci support. This is crucial Fibonacci resistance. All about this level, each and every time. If you know where this level is, you know never ever short near. The most powerful, the most bullish news on oil since 1999. But oil is not rallying yet because it reached reversal zone. It spiked up from crucial Fibonacci support as expected, but it's stuck in bearish correction as it reached reversal zone. So don't be surprised if oil will crash and burn all the way back down to 46. Highly possible, because reversal zone is stopping this rally on hourly chart. That's identical to reversal zone on 1 minute chart. But eventually, oil heading to here. No ifs or buts about it. And this time around, finally, I expect this level to be broken. What you trade is your choice. Once you learn the method, all you have to identify: are you a day trader or are you an investor and position trader? All you have to do, use the rules. Risk management and trader psychology is the only difference. Exact same levels. Drastically different mentality. And here is S&P reminding you, how did I know that 2184 will be a war zone? Absolutely expected. Five points later. Oil schmoil. Spectacular, best bullish news since 1999, reversing from reversal zone, heading down to here. Wouldn't that be marvelous? Lovely reminder, never acquire position at reversal zone, ever. That pure and that simple. If oil will retrace all the way back down, consider it a gift. You know the rules, you know what to do. And that's the power of price and Fibonacci. And that's the core of the course. And S&P had done exactly what we expected at 2184, not 2184.50, 5 points later.